The JSE is picking up steam on cooling U.S. inflation. U.S. consumer prices rose 7.7% year-on-year in October, below market expectations of 7.9% and the slowest pace in 9 months. Let's make sense of all of this. We're now joined by Lesedi Mabuza, Sentio Capital at Equity Analyst. Thank you very much for availing yourself this afternoon. It's quite a moody day weather-wise outside. Wonder if this is reflected on the markets. How are we faring at this hour?
I'd say on the markets, it is a good day to end of Friday. Markets are definitely in South Africa are definitely trading higher, following our global peers in the markets today. I mean, last night we saw the S&P up about 5%. We saw the Nasdaq also up 7%, as well as the Hang Seng up as well about 7%. Now, the reason for this upbeat trading that we're seeing today is due to consumer inflation in the US coming in lower than expected, mostly driven by a fall off in your energy costs as well as used car prices. And from this, the market is seeing that, okay, we are getting a sense that consumer inflation has peaked and is hoping that the U.S. Fed will ease its aggressive rate hikes going forward. Now, as well as adding to the momentum of our markets locally, news in China is that you are seeing some news and some potential news of them doing reopening next year. Even though they are still going through COVID restrictions and lockdowns, there are hopes that you will see China reopen next year and continue as normal as they try to recover the economy.
So gold is steady with prices set for the biggest weekly gain in more than 8 months. What's causing that surge?
So gold this week, you are seeing gold headed for its biggest weekly gain in more than 8 months. And even looking at prices today, you are seeing them higher. You have gold futures up about 0.8%, and even spot prices are also up 0.5%. And the reason for the good increase you've seen this week is mainly due to the weakness in the US dollar that you've seen. Now, the US dollar, even looking at the US dollar index, it is headed for its biggest weekly drop since about March 2020. And in this kind of environment where you have a weaker dollar and lower yields, gold does look like a more attractive investment to the market. Hence, you are seeing gold head higher this morning. It's also being prompted by the lower than expected CPI number.
In company news, the Foschini Group published its interim results, flagging that it lost 132,000 trading hours because of load shedding. Talk us through the numbers.
So Foschini Group, which is a popular apparel company here in South Africa, they have operations in Africa, Australia, as well as in London. Now, they have struggled in the past, let's say, year due to COVID lockdown restrictions, as well as load shedding, which impacts trading, whereas you'll see some stores are closed during load shedding because they don't have generators. Now, in this period, you actually saw results were actually quite good. You saw revenue increasing 23% to about 25 billion rand. Group profit margins increased to about 46.2% versus last year being at 45.6%, and in overall generating headline earnings per share of about 465 cents, increasing by 18%. Now, diving more into the numbers, we did see retail sales increasing by 23%, and in all of their geographic regions, you did see double-digit increases across all of them, but the growth was mostly driven by Australia's good performance, which increased by 48.7%. In their categories, the biggest categories are apparel, which is clothing and homeware, and those also performed really well in the period. The group also declared an interim dividend of 170 cents for the interim.
Let's take a look at Stir Kenneco. Their business rescue practitioner has successfully concluded the business rescue process. What now?
So the group entered business rescue in Jan 2020, and just looking at their commentary, the reason why they entered was because of COVID, and they were in a sector that was really decimated by the lockdowns and restrictions, especially when we were at home. And their loss was to the benefit of the likes of Netflix and Netflix and Disney as people went more to streaming since they were at home. So during this, as announced today, their business practitioner Stefan Smith announced that he has concluded the business rescue process after raising about 250 million in capital from 2 asset managers, and therefore resulting in the group returning to solvency. Now, going forward, the capital does put a solid foundation for the group to continue growing and operating going forward, but it's also saved about 800 jobs as well, which is really positive for the economy. And even as I'll say, as we return to normal, this capital injection and them returning back to solvency is really good for them going forward.
Lesedi Mabuza is an equity analyst at Sentio Capital. Thank you very much.